3 stocks that I currently own. Remember, don't buy any stock because anybody on YouTube or the internet says to. We're here to teach a process to make it possible for you to buy the best stocks for you in your situation. Stock number 1, Intel, Mo. Now, Intel's a doozy because it's gotten a lot of negativity. It is an absolute turnaround play. This is a company that used to be the chip leader. But here's the interesting thing about Intel that I want everybody to see. This goes back to 2000. Look at that, Mo. 2000. Back in 2000, it's all-time. Oh, it actually hit the all-time high of $63 back in 2021. But it took all that time to hit an all-time high. And it's below its 2000 price. Even though revenue's up several times, profit is up several times. Yeah. If you overpay for something, you will end up doing poorly.
It's had quite the 2 weeks.
It has had quite the few. Let's see. You're right. It's up 14% in the last 3 months, 10%, 11% in the last month. And Mo, that's what's being down 6% in the last week.
Right.
So Intel struggled. Its revenue has fallen significantly. This is a company that's doing revenue that they did in 2014. The 8 pillars, 6 X's. Now remember, we always say this. You don't buy a stock just because it has more pillars. You don't sell it. You don't avoid a stock just because it has. It's all about this tells a story. And I like this metric here of 12 times earnings. Cash flow is down. They're building a lot. They're building several very big factories. One, just an hour and a half from here.
Yeah, they're spending a lot of money.
20-some billion dollars to employ like 1,800 people or something crazy like that down in Columbus.
Mm-hmm. They have Arizona. Was Germany another
plant? Something like that.
So they're really, really going at it from a CapEx side.
Absolutely. And guess what? Their goal is, let's go rebuild. They have a great brand still.
Become a foundry
that will build for other companies that need chips made. So let's see what analysts are saying. Look at their EPS, supposed to be 63 cents a share here, but growing significantly according to analysts. To over 40. And we said this is a long turnaround play. This is not for the faint of heart. This stock was in the mid to low 20s just recently. It could probably go there again. So this is not for the faint of heart. This is a long-term play, and I'm hoping it works out. Let's go look at our stock analyzer tool. When was the last time we did Intel, Mo?
Mine was probably quite some time.
Mine was August 22nd.
Mine was October, actually.
Now, I'm assuming that their revenue has bottomed, and they're going to grow from here. I did 3, 6, and 11% revenue growth.
Okay.
I did 18, 22, and 26 for profit margin.
All right.
Same with free cash flow. Okay?
Yep.
Because the free cash flow has been beaten down lately by these big investments. And PE, I did 13, 16, and 20.
We are very in line on this.
Desired return is the only one that I would sit there and I did 10, 13, and 17.
I did 12, 15, and 18.
I don't blame you for that.
Yeah.
And I'm actually going to do 12, 14, and 16.
Okay.
Hit the analyze button. The stock's currently at 42. Now remember, when it was in its 20s, when it was in the low mid 20s, it looked pretty good. Low price of 26, high price of 65, middle price of 40. All right. Again, long-term play. If they're able to do this, it's probably going to be a pretty good return. If you buy at today's prices, the middle numbers happen, 12.8%. If you buy at today's prices and the lowest return happens, you're at 5%. I don't know. Makes sense to me. Mm-hmm. That's what I'm doing. But again, it's not for the faint of heart. Stocks, when you buy a stock, it's going to go down. You have to be ready to buy more if you believe the story there.
And this is one that I owned for quite a few years, and I sold it recently.
And you just said, I
felt like the thesis changed from when I bought it, so I was like, I'm out.
Great. Company number 2, Generac.
All right.
This one, I was so excited because I bought it like $83 or $84 a share. It hit a low of $80 just a little over a month ago and then skyrocketed. Yeah. It's at $126 per share. Guys, I'm telling you right now, this is the mentality I want you to have. I was so livid when the thing skyrocketed. It's
called Nemesis stock.
Yeah, I was just like, mother F. I was like, God damn it. I bought it at $83. It went to $8. I probably bought a few shares at 80 or 81. Probably didn't buy it the low, and it skyrocketed. You're probably wondering, why the heck does this guy want the stock to stay down? Because we were watching Ohio State, Michigan with one of our friends.
Yeah, that's right.
Connor, and he was like, I don't get it. Why do you want the stock to go down? I'm like, because I want to buy more shares. He's like, yeah, but you made money. I'm like, but I want to put more money into it so when it eventually goes back up permanently, I run up at lower prices. Right. That's the key. That's where I want you guys to get to. That's where I used to be the guy who wanted the stock to go up. Now I root for it to go down. I don't want the stock to go up. You might be like, well, wait a second, Paul, you're up 50% in your investment. I don't want that. I want to be down on my investment so I can buy more shares.
And it's also maybe 50. He's up 50% on a quarter of the position he wants.
Not even.
So
probably worse. Like 20% of the position I want to be in. All right, now this stock had an all-time high of $524 just 2 years ago.
Wow.
And it fell to 79.
Wow.
This is a great company, guys. Now, their income is falling. Is it falling? Yeah, it's fallen a little bit. Let's see quarter to quarter what's going on here.
Do a little exercise. Next time you're driving around and you're looking at people's houses, see what brand generator they have if you can see them.
Yeah.
Everybody has a Generac.
I'm about ready to install probably a Generac.
Yeah.
They did $1.07 billion in revenue last quarter. The same quarter the previous year was 1.09. Let's see what analysts are saying. EPS growth, over doubling in the next 5-6 years, assuming you believe analysts. Revenue growth, high single digits. That's a great company, great brand name. It's a sleeper company. No one, generators aren't a sexy business.
No.
That's what I love about it. I can't believe it hit $525 a share, Mo.
Neither can I. There must have been sheer panic in the world.
Let's go to our stock analyzer tool. I did it on August 15th. Here are my assumptions. I did 3, 6, and 9% revenue growth. I did profit margin of 9.5, 10.5, 10.25, and 11. Free cash flow is a little bit lower in history, so 7.5, 8.5, 9.5, 15, 17.5, and 20 on my ending PE. Same with the free cash flow. And I want a little bit better return, 11, 12.5, and 14. So my prices, that's why I was buying it below at 80 bucks.
Exactly.
Look at this. That's why I was buying it at 80. At 80, makes a lot of sense. At 126, I'm not buying more shares.
Right.
Now, guys, if you like this, on top of this all, we have this community of 1,000 investors. Go to everythingmoney.com. We have a 7-day free trial, full access free trial. Go check it out, everythingmoney.com, and you get all the tools and all the community. Stock number 3, Alibaba. This is, guys, this one probably has the biggest risk from a geopolitical standpoint.
Yes.
China is the fastest growing middle class. It's a fast growing economy, has 1.4 billion people, but there's a lot of still back and forth with China. Are they going to invade Taiwan? Is there going to be an issue here? Alibaba is one of the biggest companies out of China. I think it's been a story that's been beaten up. $320 a share a little over 3 years ago as their all-time high. It hit a low of 58 a little over a year ago. I've been buying and dollar cost averaging on the way down. I'm definitely down in this position, not worried. My biggest worry is if all of a sudden there's an issue with China and the stock goes to 30 bucks a share, what do I do? Because at that point, it's like, what is going on here? But I want everybody to remember, when we first started buying Alibaba at 150, people were like, oh, it's the ADR. You don't really own the company. I don't hear that anymore.
What issue with China do you mean?
Well, what if they go to war with Taiwan and the U.S. goes, yeah, we're going to defend Taiwan? Now, you would think that China would be more rational that they like having money. They like becoming less communist. People are getting the taste of capitalism. But crazy people are crazy people. Who knows? There's a lot of risk involved with this in that regard. That's why my return requirements are greater for Alibaba. So we're going to sit there and look at that and see what it makes sense. Now, here's the good news. Revenue is increasing. Profit and free cash flow are getting back to their normal and increasing levels. They were going to spin off 6 divisions. Now there's been hesitation about that. So there are some issues here. Don't get me wrong. What's up, Mo?
Forgot that they're going to pay a dividend, remember?
Oh, yeah, they're paying a dividend.
Forgot about that.
But they're buying back shares.
Correct.
Let's see what analysts say about their earnings per share. Okay, going up high single digits, low double digits a year. Revenue growth, kind of all over the place. It's kind of weird.
Right.
And let's go check out Stock Analyzer tool. I'm going to pull it up. When was the last time I did Alibaba in our Stock Analyzer tool? Yesterday, 2 days ago.
Mine was a while ago.
Let's do the November 16th one. So we have 5, 8, and 12% revenue growth, but I think it's reasonable for a company like this. 12 would be awesome. 5's kind of like, listen, you guys should do 5 because of GDP growth and expanding worldwide. 8 seems about right. Profit margin, I went on the low side, 15, 19, and as they start to get bigger and bigger, maybe their profit margin can increase. Mm-hmm. I did a little bit lower, a little bit higher on the free cash flow, because if you see right here, their free cash flow is higher than their profit margin, which we like. Yep. Their current PE is 10. Their current price of free cash flow is 6. I did 16, 18, and 20 across the board. Now, desired return, I did 12, 14, and 16. I'm going to go a little bit further. I'm going to go 13, 15, and 17 because of the geopolitical risk. The stock's currently at $72 a share. Low price of 105 to 120, high price of 233 to 273. Guys, look at these returns if you buy at today's price.
I even went more than you. I did 15, 18, and 21%.
And it still works.
And it still works.
Guys,
by a lot.
Thank you very much for your time. Everythingmoney.com, free 7-day trial.